Hey traders, Jeff Yates coming to you from Full Throttle Traders. I want to take a few minutes today and kind of share with you a little bit about what we're doing with our fly trap strategy. This is a presentation that I did on January 20th. I'm going to revisit that, doing a live stream today. Hold on one second while I turn off my. This is a presentation that I did on January 20th. I'm going to revisit that, doing a live stream today. Hold on one second while I turn off my. This is a presentation that I did on January 20th. All right, back at it. Jeff Yates with Full Throttle Traders. I'm going to give you a little bit of a presentation that I did on January 20th. So you kind of get kind of the flavor of kind of how I trade. I've been a trader for about 25 years. Most of those years were full-time. And I've came up with some and developed some different strategies. A lot of them, we've heard of different things out there, moving averages to, a lot of different indicators that come through the platforms. But this is something I kind of developed that works very, very well. And so I'll take a second kind of share with you as we kind of go through here. Anyway, Full Throttle Traders. Trading, as you know, in financial markets include options have significant risk. We know that. We always say this because we want to just not surprise anyone that might be brand new checking in here. This information is for educational purposes, and the past doesn't equal the future, so this shouldn't be considered financial advice or a guarantee of income. Before engaging in trading, you should carefully consider financial objections. Options can result in losses. Full Throttle Traders does not guarantee profits. And again, by participating in our program or using the information provided, you acknowledge and accept the risks associated with the trading. All right, enough about that. Who am I? Who is Jeff Yates? He's a former race driver. Grew up in Daytona Beach. I won't belabor this. I'm going to get on with the presentation, but the reason I'm telling you this is because my background does kind of translate into trading in a sense of they have a lot of similarities. In racing, there was a lot of things like aggressive, when to be cautious, certain situations on the racetrack, what we call cautious aggressiveness, things like that kind of come into play. So being able to make split-second decisions, maybe when you need to settle second, when you don't want to push your car to try to go for the win, when you know that you're really going out. All these things seem to mirror trading, parallel to trading from what we know in the past. So anyway, expert combining technical analysis with disciplined strategies to navigate volatile markets. We're passionate about teaching how to approach trading with a focus, strategy, and confidence. If you're new to trading right here, it's going to take some time, right? But with the right guidance, you should be able to shorten that learning curve substantially. And that's kind of where I come in Full Throttle Traders. This is us sitting on the Daytona 500 starting grid. Finished 7th in 1986 against the old 11-car Budweiser Darrell Waltrip back then. So we definitely, they look so much different back then than they are now. Understanding the fly trap strategy here, the secret psychology of successful traders, and why is it exactly opposite of what a lot of traders say and do, right? They do one thing, like you get sucked in with so much emotion in trading. You see volume spikes, you see the actual it actually kind of moving in a quick direction. You want to take advantage of that. And I sit back and I tell our traders that talk about this, hey, is there a volume spike or a spike in price here? I said, sit back, it's coming back. Very seldom do they continue. The key is identifying those spikes and understanding when the sweet spots are coming into the fly trap. Many of them fail. I'm going to say a large percentage of them fail. And so using the fly trap helps you identify where those failures might come into play. So afraid of missing the big moves? Discover the fly trap trading strategy for catching stock shifts before they happen. The best part, this even works if you're trading part-time or holding a full-time position. So if you're trading off the daily charts or maybe weekly charts specifically, works the same way, just works in different higher time frames, but the fly trap works the same way. Today, I'm going to open the vault on that trading. So today in my fly trap presentation, We're going to focus on identifying and avoiding the hidden obstacles that can derail a trade. Today, specifically, you're going to learn how to spot key resistance and support areas using a lot of moving averages, not just moving averages, but certain moving averages through certain time frames. That's the key. And I've been worked over the years to develop what's important and what's not. We all have moving averages, or we can have them, but certain ones don't have as much meaning the other. Some moving averages you can count on them. I mean, 90% time out of work, but they have to be on a certain time frame. And then, you have to look at those matching time frames as well. The importance of patience and waiting for the perfect setup. How to use the fly trap strategy to filter out false breakouts and poor entries, right? That's a big one right there. Why disciplined decision-making can save you from unnecessary losses. Practical steps to building confidence and saying no to risky trades, right? By the end of the session, you're going to have a clear framework to help you approach these trades with a lot more confidence, precision, right? And patience more so. Let's get started here. In the presentation, I'll be reviewing some information to give away a simple tool that transformed my day trading. A word to live by. I think you might have heard of this before. Basically, it says, I'd rather be out of a trade that I wish I were in than clearly be in a trade that I wish I were out, right? That goes without saying, right? We would rather not be in the darn thing. And a lot of times we end up getting in trades and we find ourselves in a position either to cut the loss or you start managing an ill trade right out of the box. And it's not fun, but the key is stay out as many of those as you possibly can. Today you're going to go, you're going to learn in detail about these moving averages, but specifically what time frames that they seem to interact on. And again, in multiple time frames working in synergy together. Also, this term ATR, and some people have an average daily range, which is pre-market versus not pre-market or post-market. This is just something that I have always look at when I'm trading because I want to know, where, get my screen back here. I want to know what the average trading range of that stock is, right? Why do I want to know that? Because stocks have muscle memory, right? A lot of times they'll move a certain distance throughout the day, or even the hourly chart or 15-minute chart. Their muscle memory, their retinal retention, they do the same thing. There are certain times when they run 2 to 3 times. Take a look at Starbucks in the last couple of days. I told our room traders, hey, look, if you're trading Starbucks, you could go twice the range. It went 3 times. Unless you're moving above with clear void to the left or moving below with clear void to the left, I can almost guarantee you it will not exceed what's on that chart by more than 10%. But outside of that, it changes. You're going to look at some charts in here that actually go through that as well, okay? 8-minute EMA, 21, all the way down to fib line. So let's walk through those. So daily and the 65-minute charts. The daily exponential moving average. Once this is breached, now again, this is the EMA. It's important that you understand EMA versus a movement. This means that the line is moving while the trade is active or live. A simple moving average means that it closes when the day ends. So once you move above or below an EMA, and this specific one I'm talking about is the 8 on the daily chart, you're going to find that the majority of time, they will close below. They will move beyond, but they will close below or pretty close to below that line or at that line. Go back, and when I give you these things to start, I want you to go back and look at some of your charts. Put a few of these moving averages on there in the time frames that I give you, and watch if this is not correct. It'll happen almost every time. Nothing's perfect, so there are seasons when it doesn't, but for the most part, you can count on these. What I use these for is determine when I'm not going to be entering a trade. I filter and I scan hundreds of stocks a day, and I'm just trying to see what not to get in. When I find those things not apparent, I'll actually look at those stocks as potential ideas on my watch list. It will push through, but again, big percentage of the time, move back down. SMAs and EMAs are subjective. We know that. Price did not trade there. The king is candlesticks. The king is trade where price is, and I do. But I use these as a filtering mechanism, almost like a fly trap that keeps me out of some of those trades where a lot of traders would be in if they were not using those subjective material. Price void. Once again, you clean over the high, you pull back in, you gap down or move lower here. Once they flew back over the high, this is where the trade actually works, because at that point, you are in a transition type of trade. Means it's beginning to transition. When they close 2 or more bars above a particular moving average, and I'm going to lay these out specifically for you in a few minutes, that's when things start to kind of get interesting. That's when the transition is more likely to follow through. Even better, wait for a pullback. So once you transition up, instead of maybe taking the high, you want to be pretty clear on it. Wait for the pullback back to the other side, in this case, the 8 on the daily chart, or the trend line that you drew. That's the place to get on board. And you'll see a chart in here. We just got here a few days ago, and we made a mint. This was not 75, the thing went to 90, just because of the transition, and we got the pullback in that transition. So here's that live example. This is QRVO. It was just a few days ago at $70. We entered right about in here, just over the top here at the trend line, and boom, it had the gap. Well, how did you know the gap was going to be there? Was it earnings? No, it was not earnings. What made this gap work is the way that money forms, the way that stocks actually begin to move higher. You start to see it showing up in the charts. Money forms patterns because that money that's being formed is the process of where money is going to get ready to come in the stock. I'd be lying to say it happened all the time, but I would say a good lion's share of the time it does. Notice how you broke out above the trend. You transitioned above the 8. You could have taken it in here, but we took the trend line pullback here, which is right here, and the transition line. I mean, we got in with very little drawdown, and this thing just sailed, and we had the gap. This was telling us that money was getting ready to transpire in this particular one here. And we just had a small risk on this. We just took the pop up, pulled 327 off, but it went with the same small risk, probably $200 risk at that level. You probably would have made, I don't know, a couple $1,000 if you'd have held on to that stock through the duration of the following days. But we usually take a habit of taking that big run. Here's Chipotle Mexican Grill. Here's where we're getting into the detail of the charting in here. When you start to see this move down, right? You start to see the 8-period moving average move down like this. You're starting to see it here. Stocks will stay below there. And when they touch above here, specifically, they fall back down again, and you're waiting for them to come through. The only time I'd be entering on the long side, when I'm down on the EMA on the 8-period moving average, is when there is a separation, right? Here's the way I word that. If you look at the price of the stock and you look at the 8-period moving average down here, you consider this the mother, consider this the kids. The mother doesn't like to be too far away from the kids. So what it does, it works its way back and fills the hole in there. That actually happened today as well on our AXT trade. It fills the hole, it goes back in. So the only time I'm going to go in the opposite direction for a scalp is when I start to see separation against the 8 and price. Go back and look at your charts. You're going to see this to be the case in most cases. When you're trailing this, you never trail it to exactly the 8. I typically trail a couple bars back as long as it moves down, and then it touches again a couple bars back. So in this example, once we started crossing the 8, 1, 2, stop goes to here, 1, 2, stop goes to here, no stop, no stop, no stop, 1, 1, 2, stop goes to here. I don't do it on every bar. It's almost like a miracle to me how this works. People that trade and track it on the 8s, they get stopped out early. It's, yeah, stopped out. Or they trade bar by bar. If you'll wait 2 bars specifically, I do this on a 5-minute trail a lot, but this works the same way on a daily or a 65-minute chart. If you'll kindly wait for it to stop, right? And then push it down, let it go down. At that point, when 2 bars further go down and it hasn't breached here, stop goes here. The stop stays there until you touch the 8 again, and then 2 bars beyond that, then the stop goes down. Don't get in the habit of doing what a lot of novice traders trying to protect that green, and they're afraid of it coming back against them. If you're in a downtrend on the daily chart, there's a pretty darn good chance you're going to stay in a downtrend on the daily chart, right? It's not going to turn just because you see a little green bar. For you to know that, you got a better chance of, taking a shower and getting water by a water buffalo than that happening, right? It's going to stay in a downtrend for some time, unless you're just the unlucky one at the bottom. Wait for it to breach again. Wait for 2 lower highs after the breach, then move your stop. Otherwise, you are getting too tight with your trail model in there. We did this on EOG in the oil and gas here just a couple weeks ago. We started on the triple top. I don't have that one in here. We just kind of did that play after I created this. And we came down probably $7, $8 from 136, 137 down to one trading 129 today. We did it the same way. We trailed the 8, we trailed the bar by bar, 2 bars back, but we didn't trail it until it touched the 8, and then we waited 2 bars below it. Try that. Even on the 5-minute chart, it will open your eyes to see how these work. And these are a fly trap. Some of these things, when you start to trail, if you do it too soon, you're getting caught in the trap. Fly traps are basically on how to get in, get away from that stuff. This is a trail mode that still has the fly trap intact, but allows you to stay away from price and wait for those things to actually happen. The key is that I have rules, right? It's just, I'm very rule-based. I know exactly what I'm doing. I never get emotional. When A, B, and C it happens, I move my stop, or I move my target, or I move my entry, or I move my ad. And that's it. That's all I wait for. I wait for those things to stop. At that point, then I move my stop down. The key is staying non-emotional about it. If you're trading too much risk or too much size, a lot of times that will get you out of a trade because you're getting out of a scalp. But when the scalp goes bad on you, you're going to carry a lot back. So the key is trade smaller, typically at first, to understand and get away from emotion. Let rule-based come in and just follow the rules. And you're a lot easier. It's a lot less stressful trading in that environment. Here's Chipotle on that 65-minute chart. Once again, you can see how I drew the trend line, but I want you to take a look at something here. Now, this is a 65-minute chart. You're more likely to breach in here. I would have had a stop in here, no touch, 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 touch. You could have stopped in here. So 65, you can get this. This happened to be on a gap up. Outside of the gap, this would have actually failed and traveled right down to 60. This was just a surprise gap here, earnings, but failed. And then it went back in. But outside of that, that whole process would have worked perfectly. Trail here, back down, touch, trail 2 bars after, touch, trail 2 bars after. And then I'd have been basically getting extended on wide run from here. This is where your scalp goes back into the moving average from there, right? But when we transitioned in here, just like I showed you on QRBO the other day, the move up, the pull back to the trend line, and even better at the 8-period moving, this stock is on the way back up. Now, it may pull back, maybe news comes out or earnings comes out, but it's specifically heading back to a supply area, which is right here around 60 bucks. That's wide range bars that ignite, typically leave supply behind. That's where it's headed to, okay? AVGO, you can see this process here almost wedging back up. You see we're starting to get back above, kind of go between, and now getting above. It's still wedging between the 50 MA and the yellow or the gold, but it's starting to transition. I don't have a trend line on this, but you can kind of see that. And that price is back up in the 240s now. This is just a few days ago. It happens, I would say, on about 70% of the stocks that you watch. To what level they go, that's always going to be different, but they do go. Here's a couple here on PanW we did the other day. Once again, double bottom in here. Price got extended from here. Mother doesn't like to be far from the kids. Remember that analogy I just made? When it does, scalp back to the trend line. When it breaks over, what happens? You can pretty much count on it. It's not going to close above the 8-period moving average. When it does, 3 or 2 in 10 will. I'm telling you, it's that high of a percentage that won't, at least initially. Once it gets above that, it can go, right? Especially when they gap up and pull back, almost use it as a support area. Yes, it is subjective, but you have, when you use subjective tools with candlesticks, they really form and fire up the trade a little bit. Same thing though. Look at this thing here. A fly trap uses many time frames. This is a daily chart. This is a 65-minute chart. You're seeing that transition down here. You're seeing the 8 start to work its way back up. See it? It's starting here, right? Now you still need to clear this area. A gap up or a solid move will clear it, and then you buy the pullback. You're starting to transition on the 65-minute chart. And so one of the keys is make sure you have multiple time frames. This doesn't work specifically in one time frame. Have a daily, watch a 65-minute, watch a 15-minute, and then maybe a 5-minute. If you keep those 4 time frames or even a weekly chart in check, you're able to better than most people determine where the turn might be. Don't force it. Don't make sure it happens and then take advantage of it. Don't try to nibble in, wait for it to happen, and you're on the bottom side. Because many of other times in here, traders are trying to get long in here and they're failing. They're taking out the lows one more time. It's that last low down and you're here and they're stopping out here, taking you out, buying your shares back from you. And then this is where the transition is starting to happen. Don't get in too early when you're doing that. Here's Home Depot. The struggle at the 8, the touch, the pullback, 1, 2, that bar went higher. This one doesn't count. At least 2 bars after that bar got above. Notice where it closed down below the 8. That would be your stop if you were on a downtrend on this. But as far as trying to get long without that, not thinking of this in terms of where your stop would be on a trail, think about this in terms of look at that 8, right? This is January of this year, 2025, right? They close below this, moves up, gaps up here, closes below, moves up, closes at or below, moves up higher, takes out these where traders are getting in, closes below. Now it's starting to go. I'd wait for the gap and then look for the pullback, and then get that pullback right here, and then take that thing higher. Too many people get caught in this fly trap, moving up, trying to catch that first move. And it's not going to happen, right? Again, I'm sharing this with you now, but I want you to do this on your own. Watch these. Put the 8 EMA on your daily chart. Put the 8 EMA on your 65-minute chart. I use the 9 EMA on my smaller time frames, but for intraday day trading. But this is money if you'll start to follow this. And again, it's proven out for me, and that's one of the reasons that I've been full-time for the last 25 years. I'm 60 years old now. I've started trading when I was, 50, 40, 35 years old, and I've been doing this full-time ever since. I might have learned a thing or two, and I've been able to develop some things that I've seen. I've done this day in and day out for over 25 years. Take a look here at Home Depot. This is a gap up on the 65-minute chart, but another tree branch indicator, I call it, or another area, 200 period moving average right there. Flat 200 coming into the 65. Don't take the pullback. If you take the pullback, that's fine. Scalp out. This tells me this is a scalp entry. Better yet, I wouldn't even take it there. I'd wait for it to settle, try to catch the 8, scalp out the 200. That works like a charm. 200s on the SMA, not on the EMA, but SMA, the 8 period on the EMA on a 65 and a daily chart. When you see that and you're approaching it, get out of some or all. Ideally, get out of all of it. If it's too close and you're seeing it right now, but the play looks good, and you're 200 above, go on to the next trade. This is where traders get trapped. They get in that fly trap where it looks sweet, but as soon as you enter right there, that thing closes up on them, and they're no better off. Here's AVGO. Once again, remember the one we saw earlier? Here's all the fly traps. The 50's coming up, the 8's coming down. And you got the 8's crossing the 50 right here, or the 50's crossing the 8. Fly trap, close at or below, close at or below, close at or below, below, below. Went up above it, closed below. Went up to it, closed below, closed, got above it, transition, and here's the power. This is right off January charts. Take a look at this. Once you got above this, it's convergence. Then you could buy somewhere in a pullback on the smaller time frame. This is a 65-minute chart. You can look at the daily chart, maybe buy on a pullback, and then catch that move in here. But if you try to do this too early and not have these things lined up, you're going to do what most people do. You're not going to have a good success line going higher. You're going to scalp out, take small losses, maybe take bigger losses, and do what non-professionals do, add back to your positions, and that's never a good thing. Here's one on APP we did the other day. Gap up. This is where I like to see them gapping above the 8. And this is the 21 EMA. I do watch how they cross as well. While gapping above the area and the pullback, right? And then this has a much better chance of going higher. Now that it's above the 8, this is kind of like our subjective support, right? One of the reasons that works so well, the 8's cross to 21, is because traders see this. I'm trading the candlesticks on the right side of the trend. I'm not trading the trend on the wrong side of the candlesticks, right? You got to have both in there, and you got to look at this in multiple time frames. We made a nice mint on this here on 117 a couple weeks ago. This is just who we are. This is Full Throttle Traders. We're an online trading community. I'm the main trader in there. I trade all day with our room members. We actually go into live events. We have mentorship calls twice a week, but we're trading live. I'm sharing my screen with you on every trade, on where I get in, where I get out. This is just some of the people on how we're actually trading through Discord. And anyway, we do midday recaps. We do late day, end of day recaps, or daily analysis with the trades. We do real-time alerts. We trade options. I day trade for an hour and a half in the morning, stocks or options. We go into iron flies, and if you don't know how to do them, we teach you how to do them, right? They're very easy, low risk, high reward. We trade, probably 6 to 8 trades a day or more, depending, sometimes more. We're trading iron flies, butterflies. We're trading stocks. We're trading diagonal spreads mainly just for risk protection on the downside. And we're trading a lot of different types of styles of trades in there. But we teach our members how to do this through our mentorship calls. So if you're not familiar with that, you get those special live one-on-one calls with me. And I get on live with you and show you how to set your computer up, how to set your platform up, and then get you started. Here's where we are. I do want to show you this because for 97 bucks a month, you get all that. One or the other options, or day trading, or both in here, or you have the annual down in here. The annual basically gives you 4 or 3 Zoom calls, 45 minutes a year with me. It's like $750 value. It kind of comes with it. So we also have the boot camp. This includes a 12-hour day trading boot camp that talks about this, but actually talks about some things I'm going to show you just in a second. So hang with me and I'll show you my trades and how I use this boot camp that you get as this. But this is why I circled this. Daily recaps, learn from each day's market action with detailed recap videos sent to your email every day, and exclusive alerts, stay ahead of the market, real-time alerts, ensuring never miss a trade. Those come out real time. You have time to ask me questions while it's going on prior to the entry. Direct mentorship, access mentorships on Tuesdays and Thursdays where I can look at your answer your questions. I do trainings in there. It's for about an hour, hour and a half on Tuesday, Thursdays. If you can't make it, they are recorded and they're in the Discord on the recordings. And finally, that's the recap I just talked about in here. So you can also start with a 7-day trial. So fullthrottletraders.com, how to go through the details. Here's some of my trades. I just took this snapshot from a few days back in this area. The point of showing you this particular thing is to show you that when you're trading with a fly trap strategy and you're using a high sharp, low risk reward, this is what can happen. This particular cycle, 16th, 17th, and 18th, I think Monday, Tuesday, Wednesday, I had 3 trades. I had 7 losers. This is going back a while now. This is just day trading stocks, right? 7 losers and 3 winners. Now, I do a lot better than that, right? I'm averaging about 75% or so. But this particular streak had a bad streak that week, right? But here's what happened. 30% batting average because part of the trading talks about high sharp, low risk at a 4.43 sharp ratio. What does that mean? I had when you took the average winners and divided them by the average losers, I was 4.4 to 1 on my win side. So I netted out in a small risk, $1,148, netted 3.1 R on a 30% batting average in that particular 3-day stretch. Now we do a lot better because our batting average is always better than that. But you look at that, I wanted to show you this specifically because bad times with good management and good fly trap strategies yield out good returns. And that's the key because most people are dealing down here at less than a 1% sharp with a 50% batting average. I would rather be at a 30% batting with a 4.1 than to be at an 80% batting average with a 1 sharp. Okay. It's not about how much you win or lose. It's about your sharp ratio, how small you're able to keep those losers using our method. So you don't need to be right a lot. You do need to have good money management in place. Twice a week, I may get 2 full winners. So it's hard. It's not that hard to make $1,500 to $2,000 on a trade that day. And knowing that I have built in my carcass of I could trade 6 losers in a row and be break even. That's risk reward. Here's just an example on this XPEV, 688, 104 on a piece of it. Down 173, 170, 178. That in itself, right? You can see my winners are big, my losers are small. Then that's not indicative of this. It's just one of the days, right? To show you that losers stay small, winners stay big, and that creates high sharps in here. Now, you do need this. This is something I developed. It's a complete spreadsheet. You'll get access to it if you stay with me to the end. You put your risk size in there. You put you're entering your stop here. It tells me where to add, where to move my stop, where to go break even, all this. And the reason I do that is like, well, that's just a spreadsheet, Jeff. You're right, it is. But it keeps me from thinking outside of the emotion box. I don't want to get emotional in stocks, but when I might see I'm $1,800 up, that's a lot of money, right? And a lot of time we have a tendency to take it. And I'm like, why? Yes, I know you could come back down to 800, but it also could be 2,500 or 3,000. The key is having a management system like this. Now, I've spent years developing these exact strategies that tie into the fly, these exact calculations to know where they need to move to keep the fly intact. And and I just sit back, I wait on this 4R move. 4R means I'm 4 times my risk. So if I'm 500 risk, each trade can make $2,000 for me, right? Does it happen every time? I'd like to say it does, but it doesn't, to be honest. But if I get 2 of those a week, I start off my week at $4,000. This is only about 15 to 20% of the trading that we do. The other 80% starts after 10:30, right? That's where we start getting the options, the diagonals, the iron flies, and some credit spreads and things like that. So anyway, just going to give you an idea. Here's another one. Here's Hood. Took this Hood on January 14th. Once again, I'm running through fib levels. This is on a 2 and a 5-minute chart. I'm waiting for clean candles, number one. What does clean mean? I don't want to see a ton of dojis in there. I don't want to see top to bottom. I want to see these tails and near the bottom of the close on most of them. Not exactly, but perfect. I want to see around a 38 to 50% pullback, no more than 61.8. I want to see VWAP coming in about that point. I want to see the angle of retracement to be very subdued, not straight down. We'll see it to have a nice 30%, which means it's a bullish pullback. I do want to see relative strength. I do want to see the market pulling back. I want to see the stock holding up. We took that today on AMAT. We took that today on Google. And right in here, we got in here, stop 50 cents. We only had like a 3-cent drawdown on this before this stock moved. Again, 50-cent stop. I do take tight stops in here, but I get these exact entries where they work. Last week, the most drawdown we took was 17 cents on stocks that were over 200 bucks. Now, I'm not going to say I do it every time, but it was just amazing when you time these out, looking for relative strength, looking for the right entry, and all these other criteria I'm talking about. Our drawdown is very little. We still have stops, don't get me wrong. But the key part is that I only start off my trade at a half risk. So before it went higher, it was sitting in here flat. If it did go down and stop me out, I'm only losing 1/5, 1/2 of 1R unit. I never start full on my trades, and I never add to the losers. I only add to the winners, and that spreadsheet I just talked about does all the math for me. I get in here, I'm going to add here, I'm going to raise my stop to here, I'm going to go break even here on average. And there's little, you see the little icons each time you mouse over, it describes that for you. And where I'm taking the profit at 1/4R, 3R here, go and break even 1R, 4R on the take. We did it on Costco today. Yesterday we had a 3-bar play. Go back and look at Costco. COST got in at 968 yesterday. Wide range bar, narrow range bar. Narrow range bars to take the high in Costco. We did it with stock because it's expensive in options. Had a $15 cycler, had a nice gap up and run. That play worked. It's called a 3-bar play. And I don't know, trade them to say, well, the market's high or low. I said, that's a pattern right there. Money formed for a reason right there. It's going to go. You know, there's a good chance of it going there. So I take the play. So Costco went up. We made about $30 higher in dollar amount in Costco just this morning. And we're still in half, took some, we're in half looking for a $1,000 run. Anyway, so you kind of see it here. Let's go back here. What do we do at trade here? We trade day trading. I spend about an hour and a half to an hour and 45 minutes going live, showing you my trades real time before they happen in our room. You're able to follow me. Many of our traders do. Answer questions on Discord because I'm talking to you at the same time as we're going through this. We do, sorry, get back to that screen. Credit spreads. We do these multiple times a day. We typically at 9:45, we're starting. One of the other members runs through a data. He's actually a data engineer for a publicly traded company. I won't tell you which one, but all he does is SPX credit spreads based on 20 years of data. He's looking back and saying, okay, this is the criteria based on 20 years that gives us the best odds. He's doing that. I'm doing that a little later when I'm done day trading. We're trading diagonal spreads after about 10:30, 11 o'clock. We're rolling the short legs as we begin to move towards the short strikes. We're doing weekly credit spreads, trading for income. We're in one right now on the SPX at 6,400. That's almost at full profit. We just took a few days ago, 32 days expiration. We're doing covered calls, either poor man's covered calls or just covered calls by selling cash puts, security cash puts, and then running calls against those. We're doing straddles and strangles, long and short, and then we're selling puts for income. I took a puts today. I sold puts today in the triple leveraged KRE stock today. Forgot the name of the symbol, 4 symbols for the D. Triple leverage in here, and I'm already in the money right now. And I went out about a week on that. We're doing a lot of these weekly credit spreads. We also took American Express today in a weekly credit spread. So a lot of different things in here. And many of our traders that come on board, they don't know how to trade other than buying or shorting the stock. Some of them not even know how to short a stock. We teach them the rest of these, right? So it just takes time, but we teach them that process. How about our education? We do this daily recap videos I talked about, 20 minutes a day, live Tuesday and Thursday mentorship calls. They're also recorded if you can't make them. All day chat about plays with myself and one of the other traders and members. We're trading here, trading so you can kind of answer your questions, and we're updating you on as we're moving our stops up or down. Weekly credit spreads, trading for income, annual memberships. We get 1/4 one-on-one Zoom session with me to help keep you on track. Why is that important? Because you can start on your own, you can follow me. At the end of the day, don't you want to learn? You don't have to. If that's not important, then you don't need this. If you do want to learn, my deal is to keep you accountable. Know your plan, and then we build on that. And I keep notes. So each time every quarter, we go through a 45-minute session. I'm gonna give you a plan, and we're gonna look at those stats and data as you grow. So far, I've been able to keep that on track with scale. So it just keeps you engaged and moving forward, and help me to help your plan further along as you begin to do more and know more, and also your risk management as well. Are we profitable in our trades? Here's just the 13th to the 17th here. A few trades that I took in here. And so far we had one loss in here and mostly wins. I do this on a 250 risk. Our risk is about $500 a trade. Our risk and options are about $5,000 risk per trade. It doesn't mean you have to do that. It just means that I do that. But as you get comfortable, you can start working your way up the ladder. But you can see we have a pretty good window. This is not counting any of the day trades. Here's our day trading for the week here, as a matter of fact. Our day trades, we earned about $1,100 just there, not counting. There's probably another $2,000 or $3,000 in here. Just all these were called before we actually happened. They got in, we managed it with the room, and then we exited, and the room exited with us in here. This is what a typical week looks like. There might be a couple more losses from time to time in there. Usually they're small, but we have a high win ratio. And again, it doesn't matter. Don't go to other trading channels and say, what's your batting average? That's the worst thing you can ask to a trader. It's not about batting average. We happen to have a good batting average, but we also have to have good management. That's a great combination. But if you have a poor batting average, someone that's maybe 40%, don't count them out, because their management could be totally different. They're making more than a 70% batting average. So don't look at it that way. That is one of the first novice mistakes. These are basically contracts to keep this in balance. They use that 250 risk just to keep it consistent for the room, but you can choose whatever contracts you want. Using the normal risk, we profit about $2,800 last week. Many traders, including myself, trade well above the risk. So, I trade a lot more. That number could be like a $4,800 or $6,800 a week. So, but we ask that you stay at one or two contracts till you learn it. Who are we appealing to? This is one of our members in here, just simply this whole while back. So look, I've been following you for 10 months. I'm finally getting the nerve to actually pull the trigger with you. And he did. He went from doing one contract to a lot of contracts. And this became his P&L was around maybe $100 a day on average. And he started pulling the trigger. And this is the P&L. This is from Lonnie. And he was following me on credit spreads. He liked that only. So you can pick and choose what you like. You don't have to do all of them. Just pick one or two. Here's another one. Michelle, she's also in the room today. I was just talking to her in the room. She had her first personal best week here. This, again, I just took the email back from the date here a couple of years ago. She's at 2,000 for that week. She's a new trader, right? And she also liked the credit spread side of things. So she just did this on credit spreads following our room. And then there are more. I won't go through all the details in here. Bill G does a great job, follows here. He's lives in Tennessee, and he's learned to where he's actually doing his own plays now. It's kind of cool to watch. Going back to some of the things here, look at the fly trap coming in on the weekly chart of when, right? See the fly trap, the 8 turning, but in here, not above the trend line, hasn't turned yet. Finally got above it on the gap, right? Once we got above the gap, here's where it happened. There's the pull back to the trend line, and there's the move higher, right? People that are they're getting in these trades, and they're maybe setting their risk, they're getting stopped out. They don't get on the ones that move. They seem to get in the ones that stops out. They don't get on the ones that move. Why? Because they're not using the fly trap properly. They're not coming down in multiple time frames. They're not drawing the lines. They don't have any moving averages. I'll say moving averages won't make or break you, but they're a heck of a guide. Really a great guide. It's, to me, it's just another emotional tool that I take off me. I say, oh, it's not there. Leave my hands and walk away. I'll maybe watch it for later, but right now, you're not my play. I don't ever second guess myself. When it hits my rules, I go, right? Doesn't guarantee me a winner, but what you're seeing here in these transitions, these are higher probability transitions using the fly trap. Anything before this is the fly trap. They look sweet, right? Bearish gap that bullied, took out the low just by a few pennies and stuck everybody's stop out and then went higher. That's how most people trade. Not me. I did it first, but I've learned over the years that there is a cycle in the system to this. Here's URL 15, or actually URI, I think it was 15-minute 9 EMA. It works on the 15-minute as well. Once we got down below the 15-minute, look how the fly trap now is on this side. Don't go long back into there. Kind of a bullish retracement, but look at it, stayed well below this. Whatever side that I'm on, I'm going to be on that side. And if I was to do this as a stop, I'd be raising my stop to here, and I'd be able to be out here. But if I'm looking for transition, it doesn't mean I go short here, but I'm just showing you how powerful these 9 EMAs can work, much like these 8 EMAs on the day chart. This is a smaller time frame, so I use smaller ones in there. Anyway, I hope that presentation helps. I'm going to go back just to a couple of charts in here. In case you missed the very beginning, a lot of this was derived from me being a stock car driver from Daytona Beach. And I used to race stock cars, and I found that timing is everything, precision, right? This is risky. I guess what kind of brought me to trade. I'm a, a thrill seeker, if you will, for doing this, but it translates well into racing. And when in racing, you had your strategy, your technique. It's the same in trading. You have to find out your strategy. It helps that I've developed one and you can kind of follow along, but you still want to even develop your nuances within there. And then I was with a moderator for 2 major companies. I've heard of them both for many, many years, and probably 8-10 years. And then just April of last year, I decided to go ahead and open my own company. So Full Throttle Traders is new since April 15th of last year. You can go to Full Throttle Traders. You can check on this. You can see a video of me. Whether you enroll or not, that's up to you. But you go learn some things from there. There's a lot of key points in that video and in some of the training on Full Throttle that you can kind of learn from. And if you want to take a gander at it, there's no risk. There's free 7-day trials on some of this. You're welcome to do as well. I think the more you know, the more you agree. When you start to see this happening here and you come in the room and work with me day in and day out, if your inspiration is to be a trader, I think you'll certainly begin to see some value in, some of the, a lot of the things that we do here. Definitely different in a sense that different because a lot of traders move with the first rush of a candle. We don't. We sit back, we wait patiently for our rules to come into play. When everything suggests that there's no reason not to get in, we enter the trade. So I hope this was helpful. If there's any questions, you can post them in here now. Otherwise, you can go to Full Throttle Traders. I'll hang on for just a second or two while you do that potentially. Otherwise, go to Full Throttle Traders and take a gander at the website there for maybe some more knowledge about trading and how to do that. Any questions? Leave it at that. Thank you for your time. If I can be of any help to you, my email is Jeff, Jeff, at fullthrottletraders.com. That's Jeff, Jeff, at fullthrottletraders.com. Thank you for being here, and we'll see you next time. Take care.